Good morning. Thank you for joining us. I'm Renee Nelson with PACWEST Commercial Real Estate. I'm a local commercial real estate broker here in Eugene, and I'm excited to have you be a part of this event. I've brought in kind of the mega people in the industry, Connie Bennett, who is with Silva Property Management. She's going to start first. Connie is an icon in this industry. She is the local commercial property manager that manages primarily office, retail, and industrial. So when you're driving through Eugene and you see those big, tall office buildings, that's what Connie manages. And she's gonna introduce herself and tell you more about what she manages. But all the big stuff in town, that's what she is responsible for. And then secondly is Emily Ander from CoStar. CoStar is a proprietary software that commercial real estate brokers subscribe to, and it feeds us information on not only what's happening both in the state of Oregon as well as nationally and internationally, but it's also a database for apartment complexes, industrial, retail, office. Every commercial real estate component is tied into CoStar. So they have a database of sold properties, current active listings, and then they also supply us with market reports and statistics. I think you'll be overwhelmed if you have not heard Emily speak before. But again, the webinar will be recorded. We'll send you a copy and a copy of her slides. So just grab your favorite cup of beverage and sit back and enjoy Emily's presentation. And Connie, they've got a lot of information to share. So with that, I'm going to turn it over to you, Connie.
Okay, thank you, Renee. Thanks for organizing this. As Renee said, I'm general manager at Silva Management. We do, just to give you a little bit of my perspective real quick, we have approximately 50 commercial properties consisting of about 360 commercial tenants. Those break out into 44% office, 24% retail, 14% industrial. And for this purpose, I broke out 18% into what I'll call service, which is restaurants, salons, gyms, dental, medical. So during this pandemic time, about 42% of our portfolio were the hard hit industries. And I felt fortunate and was happy that only 12% of those asked for any kind of deferred rent during the time. So 100% of our industrial continued to pay nonstop. 97% of our general office continued to pay nonstop. So the brunt of this next bit of information will be all focused on those hard hit industries that we manage. Of course, when everybody was blindsided and started to go into panic mode, as property managers, we did a lot of liaison between tenants and our property owners, did a lot of financial reviews for our owners, giving them weekly inputs because rents were coming in crazy. A lot of listening to stories from tenants, listening to their requests, and doing that in between negotiation, trying to figure out how to make everybody get through what at that point we didn't know how long it was going to last. In general, I was really happy with our business tenants. They jumped in quickly and got on the programs that were available to them to get support. They didn't just do a knee-jerk reaction asking landlords to forgive everything. And so we were able to help everyone through the transition. With all of our owners, we dealt with them on a case-by-case basis. We did not recommend to our owners, and none of them gave any kind of blanket concession for a whole property. Everybody just responded to individual requests and then customized that request based on that particular tenant and their situation. The most popular concession was deferred base rent. We, in all cases, asked tenants to continue paying any triple net charges or any additional rent that they owed. That had to continue owner expenses didn't change, building expenses didn't change. We did put some projects in that on hold that could be held during this time, but rents that were given concessions were deferred, which meant they would be repaid at a later date. We did not give any abatements, meaning complete forgiveness for base rents, with the exception being we have one, our largest property, 220,000 square feet shopping center, has 31 tenants, and some of those are big box corporate tenants. Lot more complex and lengthy discussions with them, and of course they came right off the gate with unrealistic demands. They wanted things like we'll have reduced rent until our income goes back to pre-pandemic income, and that was way too open-ended. And of course, we just had to politely say, not going to do that. And so after a lot of back and forth, overall, with their real estate and legal departments, we had all of those tenants that asked or requested concessions. They all paid triple net charges. Some had deferred rent. Mostly this pertained to April and May. A couple included June. There was one large tenant that did get 50% of their base rent deferred, but they abated. But the other 50% was deferred to be paid back, and they did pay their triple net charges. A couple tenants requested adding months to the end of their lease in return for an abated rent. We only did that in one case for a tenant that had a relatively short term left, but any of the others that had long terms, that just wasn't acceptable. So for most of the deferment repayment plans, repayments, and at that shopping center, those repayment plans are mostly kicking in next January over a 12-month period, with the exception of the tenant that had a shorter term lease left. They're starting in September, and they have to pay by December. So locally, what our owners did with retail properties, the tenants that were hit with this pandemic, they did deferred rent as well. Triple net charges were paid, and they have repayment plans starting September, and usually stretching out 6 to 12 months. So I think locally things are, people are expecting there not to be a second wave. We're acting like there won't be. And we're all hopeful that things are going to regain normalcy very soon. We did invoice all tenants fully for June, with the exception of one or two that we already had made a pre-plan. But all tenants were invoiced in full for June because of the reopening plans. We'll see what happens. But absolutely we'll be expecting full rents by July, and then working again with owners and tenants on their repayment plans and how that will all lay out. Right now, June's kind of a stall and wait while everybody does the reopening. And of course, we've had a lot of demands, especially in office buildings, for reopening. Those employees that were working remotely that are coming back, they're wanting, in some cases, kind of unrealistic, complete HVAC systems redone and things like that aren't going to happen. But, we're trying to encourage them to come back when they feel safe. And we'll continue doing the sanitation that kicked in, the extra sanitation, the extra measures. But pretty much we're expecting them to take personal responsibility for their individual offices, and how they're going to handle any situation to make their employees feel safe coming back. So that's kind of an overview. I'll be glad to answer questions at the end, and we can let Emily take it from here.
Sure. Well, that was very interesting, Connie. Really, really cool to hear what's going on with your experience. I've got questions for you at the end, and I'm sure other people will as well. I'm gonna try to share my screen. Oh dear, it says host disabled participant screen sharing.
Oh, that was not intentional by any. Hold on, let me fix that.
Sure.
I am just going to make you a host, Emily.
All right. Now let me escape from that. Oh, I am the host now. Fabulous. Now I'm going to share my screen. Yes. Okay. Can you see my PowerPoint?
Yes. Yes.
Oh, we're going to go back one more. There we go. All right. So I should probably give an introduction again as to what CoStar is and what CoStar does. If people haven't heard of CoStar before, we're the parent company of LoopNet. We track commercial real estate information in a giant database, including information about what is currently available for sale and for lease, and information about what in the past has been available for sale and for lease, transactions that have occurred. We collect all of the information from all those transactions, and then it's my job to sort through all that information and put together thrilling PowerPoint presentations just like this. And if you've ever gone onto CoStar, read any of the market reports for Eugene or Portland or anywhere else in Oregon, I am the person who writes all those reports. So I hope you like them, but I welcome constructive feedback as well. Okay, so today we're going to talk about office and retail in Eugene. And I'm kicking off with this lovely picture of Eugene. We've got some of the University of Oregon's campus in here. My understanding is that the university is currently planning for on-campus instruction in the fall. I know that sending all of those students home back in March was definitely not great for student housing landlords in the area. I imagine also not great for retail tenants in the surrounding area. But hopefully those students will come back. And once they do come back, that will boost the fortunes a bit of businesses in the surrounding community. Okay, so this is, can you, Renee and Connie, can you see the whole slide here, including the graphics down at the bottom?
Yes.
Okay, good.
Yes.
Always a little tricky to tell. Okay, so this is a chart of quarterly employment changes. So every quarter, how many jobs have been gained or have been lost since the prior quarter. And as you can see, what we are forecasting for 20Q2 like really broke the chart in comparison to everything that happened before. Right now, CoStar's best expectation, and we updated this forecast about 2 weeks ago, but our expectation is that we're going to lose about 25,000 jobs across Lane County in the current quarter. For the official figures that have been released so far, in March, the unemployment rate for Lane County was, I think, about 3.5%. And in April, that jumped up to 14.5%. But that's like certainly an undercount. I actually understand that the head of the Oregon Division of Employment was actually fired over the weekend because of issues with everybody being able to file all of their claims and get their unemployment checks that they were due. So that 14.5% probably an undercount, and we are probably going to see those numbers increase in May. Also, that 25,000 jobs lost for Lane County. Just compare the bar that you see here to what happened back in the previous recession, 2008, 2009. It's like that entire time period compressed into 3 months. So really rough for everybody. But Eugene was fortunate to have a relatively early reopening. I think it's already been 2 weeks that Eugene has been reopened for. And we expect that with that, and hopefully, you know, with the coronavirus pandemic coming under more control, learning more about it, combating it more effectively, we're going to see those jobs start to come back. We've got a very strong expectation of job growth through the remainder of this year, and continuing on next year as employment recovers to pre-pandemic levels. So this is a baseline forecast. This is CoStar's best expectation of what's going to happen, also Oxford Economics' best expectation of what's going to happen. They're the ones that provide our economic data. In CoStar itself, we have some additional scenarios. We have a moderate downside, a bit more pessimistic than this, a severe downside, much more pessimistic than this, as well as a moderate upside for people who think that this is a bit too gloomy and want to look at some more positive ideas about what might happen with job growth. So in this slideshow, I'm only going to be showing the baseline scenario, but if there's interest afterwards, I can jump into CoStar and we can look at some other forecasts for different commercial real estate types. So, but this is this unemployment picture here. This is going to undergird everything that we see later with forecasts for rent, for property values, for supply, demand, and vacancy, for office and for retail. Okay, so this is a little image that I took here just so everybody knows what we're talking about when I talk about Eugene and when I talk about the office market and the retail market. So when I talk about Eugene, I'm talking about all of Lane County. So just to set that expectation, all of Lane County. And the office market in Eugene is about 12,000 square feet spread over about 1,000 buildings. This is what we're tracking when we talk about the office market. And I'm not saying that we have everything, but we do try hard to get everything. And for the retail market, it's actually about double the office footprint. We have got about 24 million square feet of retail space, and about 2,600 retail buildings across the metro. So those are our two footprints. All right, talking about office. There has not been a lot of office construction in Eugene in the past decade. If you look at the blue bars on this chart, you can see that prior to the last recession, we had a good amount of office supply coming online, particularly in 2009, but that never really picked up afterwards. Including demolitions, net supply growth in the past decade has been, let's see, 2.6% for office. So not a lot of new supply. That is actually going to help us in recovering from the pandemic's effect on the office sector. Whereas in some other areas, like in Portland, there has been really substantial amounts of office construction in recent years, especially speculative office construction. But we don't have to contend with that higher cost supply that needs to lease up here. We just need to maintain occupancies in our existing buildings. Prior to the pandemic, we had vacancy levels a bit below 5%. We do anticipate that is going to increase. We're expecting negative absorption through mid-2021 until we start to see some positive absorption, vacancy stabilizing a little bit, but at a higher level than where they were just before the pandemic. So that is what we expect to see for office. And again, I've got my additional scenarios in CoStar, but I didn't include those in this presentation because I wanted to keep it to a more manageable length. Taking a look at rent growth. So CoStar uses all of the rent data that we get from LoopNet and from calling and having conversations with brokers, property managers, and owners to collect rent information, and then we use that to estimate a market rent for every property in the database. And then collectively, we use all of that information to look at asking rent growth, looking back into history, and also forecasting into the future. And given that forecast, what we're looking at is office rents dropping, asking rents dropping by about 7% a year from now. And remember, this relates to the employment forecast that we were looking at towards the start of this presentation. We do expect that those rates are going to recover. We're going to see a little V shape in our market rents here, and that well, within a year or so, we're going to see those rates come back to approximately to where they were prior to the pandemic. And this is our best guess of what is going to happen to office rent growth in Eugene. Looking at retail. So I mentioned with all the trends that I said about construction for office are the same for retail, only more so. We have seen even less retail construction here than we have seen office construction in the past decade, although looking at the blue bars, even more was happening prior to the recession. Our retail net inventory has increased by 1.5% in the past decade, and that accounts for all the demolitions that you see here. We had according to our data anyway, we had very tight retail vacancy levels heading into the current situation. They had been below 3% for the last 2 years. But we expect that that obviously is going to increase with everything that's going on with the pandemic. We expect to see retail vacancies rising through the end of this year, going into next year. And although we will see some positive absorption thereafter, we don't anticipate seeing retail vacancies come back to where they were prior to the pandemic within the next couple of years. I should probably also talk a little more broadly about what we're seeing for the office market and for the retail market. For office, there is a lot of speculation about what's going to happen with existing office tenants, if they're going to choose to keep their office space, if they are going to choose to switch to an entirely remote workforce or a more remote workforce. Some trends that we're seeing so far, like Twitter has announced that all of their employees are welcome to work remotely for as long as they want. Nationwide Insurance, which has got 27,000 employees across the country, has announced they're going to shift almost all of those employees to permanently working from home. They're going to go from 20 offices nationwide to 4 offices nationwide. And I'm sure that their landlords are just thrilled about that. Facebook announced that whereas before being on site was very important in the work culture, they've seen strong productivity during this period. So they're going to send about half of their employees to stay at home permanently to make that move over the next few years. But even though they're going to send half of their workforce to work at home permanently, they also are going to maintain their existing office footprint, which they view as necessary to maintain social distancing in the workplace, which is pretty dramatic. So half of your employees no longer in the office, yet still hanging on to all of your office space, which in Facebook's case is like quite expensive office space. But they feel that that's the best choice for their business. Other options, sending kind of an end of private space in the workforce, moving away from like a hot desking model to more cubicles, more private offices. There's the potential for employees to come to the office in shifts. At CoStar, we haven't gone back into the office yet. Obviously, I'm here in my living room. But my understanding is that when we do go back to the office, it is going to be in shifts and we're all going to get colors, and certain colors will show up on certain days while other people stay at home. And we, as far as I know, don't have any plans to reduce our office footprint either, which is pretty sizable across the country. Of course, some companies are not going to make the transition. Some offices are going to, unfortunately, have to downsize their workforce. They may go out of business entirely. And we may see a lot of sublet space coming online when that happens. So far, the data doesn't really show that that's happening, but it's pretty early yet. So now I'll switch over. So that's my little spiel about the future of office in coronavirus times. Now let's take a look at this retail rent growth slide. All right, so this is a bit starker than what we saw for office. And in fact, CoStar's data anyway shows that Eugene retail rents only recently got back to the level of where they were before the Great Recession. You see this kind of extended period of negative rent growth that started in 2008, endured until midway through 2013. And then the line, the solid line showing what the market asking rents were, that just came back to pre-recession levels, like midway through 2019. We're anticipating strong negative rent growth for retail, and the forecast shows that that is also going to come back pretty strongly, although I personally think that this is too optimistic of a look of what's going to happen to retail rents. So when we have a discussion afterwards, I would definitely welcome input from Renee and from Connie about what you think is going to happen to retail rents in this new scenario. As far as what's happening more generally with retail, some businesses obviously have been well positioned both during the shutdown period and the pandemic, and also will continue to be in a good position thereafter. And that includes like grocery stores and drugstores, and Oregon cannabis dispensaries have done pretty well in this period, I think. But other types of businesses have been having a much rougher ride. And in particular, experiential retail, which was looked at kind of compensating for some lost revenues going to e-commerce, to Amazon. Experiential retail basically had to shut down completely during the shutdown period, and also is going to see issues with consumer confidence coming back in recovering from the pandemic. It seems like every day there is another news story about a big retail tenant that is going bankrupt or is not paying their rent. Bankruptcies so far, let's see, JCPenney, Tuesday Morning, Neiman Marcus, J. Crew, which I in particular was quite upset about J. Crew. And for tenants who haven't been paying their rent, let's see, Cheesecake Factory, Dave & Buster's, AMC Theaters, and actually there are rumors swirling that Amazon might buy AMC Theaters. So that would be quite a disruption happening there. And also the list of small tenants, local tenants, is going to be longer than the list of national tenants that aren't going to be able to cope with this new situation, but they are not going to be publicized in the same way. And they also, like what Connie was saying, her experience as a property manager, don't have nearly as much leverage in trying to negotiate new terms, but also going to face significant financial pressure. Okay, I also wanted to take a look at investment. So this is office, retail, industrial, and multifamily investment in Eugene every year going back to 2007. Investment has really increased over this time period, but investment doesn't look the same for all of these different categories of assets. In particular, retail generally sees more interest from national investors and occasional interest from institutional investors than industrial or office does. Industrial and office both tend to see more interest from more smaller, locally based investors, individual investors with deeper pockets on occasion. But a big question that I have had, that everybody has really, is how is investment going to respond to the coronavirus pandemic and to its impact on commercial real estate? And so I have taken, we're going to look at, so that I was getting ahead of myself. That's 2 slides from now. First, we're going to look at what our pricing expectations are for office and for retail for the next couple of years. So what I was talking about earlier with determining our same store rent series for properties, we do the same thing with pricing. We get a deed for every single commercial transaction that occurs across the entire country. And we research all of those deeds to find out if there were any conditions on those sales, to find out who the actual owners are behind the LLCs. And then once we determine this information, especially the pricing information, then we can use that to determine a value for properties that are not selling as well. So we can see kind of the change in value for every asset across a given area over a given time period. So I hope that explanation made sense. Basically, what this looks at is what is the average value of a square foot of Eugene office from 2007 and then going forward into the future through the end of 2024. So steady increase from the start of 2010. We do expect to see a decline in those values, although I'll say it isn't really reflected in the data yet, and that is probably because early on in this game, and a lot of the office transactions that have recently closed were far on in the planning stages when the pandemic occurred. But this is what we're impacting is going to happen to prices in the next couple of years. We're going to see a dip for the rest of 2020, continuing on through 2021, but we are going to see those prices recover and come back, more or less to where they were prior to the pandemic. And this is the same thing for retail, only a bit exaggerated. We didn't see the prices climb quite as much for retail in comparison to office. We are anticipating that there is going to be a sharper drop in value here. Those prices are going to come back, but perhaps not at the same level that they were right before the pandemic occurred. Okay, so I have been paying attention to what deals have closed since the stay-at-home order happened on the 23rd of March. And this is the largest office transaction and the largest retail transaction that has occurred since then. But just in general, so everybody knows, when I checked out the data this morning, excluding land sales, so not including land, but all commercial buildings that have sold in Lane County since the shutdown order, there have been 10 sales that were at least $1 million in price. And that includes like student properties and industrial properties and everything. But here's the biggest office and the biggest retail sale. This follows a little bit the trend of what I was saying before about how office investment, even the larger transactions, and the Country Club Professional Park deal certainly is a larger office transaction for Eugene. But we have individual investors on both sides, locally based individual investors, one in Eugene, one in Bend. Whereas for our Walgreens sale that closed about a week after the shutdown order happened, our buyer, my Zoom bar is covering up the buyer and the seller, but I believe the buyer was a bank in California, right? Buyer was a bank in California and the seller was locally based on that transaction. Okay, so that is everything that I've got for this morning. So thanks for humoring me looking at all of these slides. And I'm happy to take questions, to discuss among ourselves what's going on. How do you want to take the reins, Renee? And should I stop sharing my screen, or do you want me to stay on my screen? I'll stop sharing for now, and then if I get questions.
Let's do that.
Yeah.
So let me mention real quick, I have one question from an audience participant that asks, will multifamily be addressed? And this particular webinar is only for office and retail. Emily and Isaac Grant from Northwest Community Credit Union joined me about 2 weeks ago for a multifamily event. I will email anyone that wants those slides. I will send you that and the webinar. In 2 weeks, I'm having an additional webinar with Leah Gesford, who is the president of AG Campus Housing. They're a property management company. They do both campus as well as market rate property management. And I'm also on that call will be Tia Pallado from the Rental Owners Association. Her niche is dealing with tenant troubles where you have to deal with foreclosures or evictions, or rent abatement, and the court system taking people in tenants. So we'll send you information on that, but today's call is really designed for multifamily owners that are trying to get a grasp on what's happening in the retail and the office sector, because a lot of my clients are diverse and they don't own simple all multifamily. They own a complete package often where they have maybe an office building or an industrial building. So I'll man the Q&A, but I would like to throw out two questions. One for you, Emily. You mentioned some of the retailers that were going bankrupt, like J. Crew and those guys. In your opinion, will they just take the Chapter 13 bankruptcy where they get to reorganize, but they stay in business? Or do you think they'll totally go bankrupt and just fade away?
I would say that that's a bit outside my scope of knowledge. I do anticipate that we are going to see a big disruption in national retail tenants, that we are going to see some businesses closing down all their locations, never to come back. But others, will probably go through a period of difficulty but then keep some stores open and maybe even increase their store count in the future. So if we're being optimistic. But this is definitely going to be a rough time across the board. And a lot of businesses, large national tenants, small local businesses are unfortunately not going to make it through this. So.
Yeah. So this question goes to Connie. I saw a letter that was penned by McDonald's. I saw it on LinkedIn that was penned by the corporate chairman for McDonald's, and he sent it out to all of his landlords and said, we've remained open, and I know this is trying times, but we are not going to ask for any rent abatement. We'll be there to pay our rent. We appreciate you allowing us to be a tenant. Connie, how do you see restaurants, especially in Eugene, changing? Do you think they'll be able to survive given the social distancing requirements?
Yeah, well, first let me just touch real quick. One of our tenants actually is JCPenney at that shopping center. And right now we're kind of waiting to see if that particular location is one of the ones. We don't think it is because they just renewed in November for another 5 years. So I think we're okay, but yeah, we're on the fence right now. I think it's first week of June. So next week that they're going to be announcing who's actually closing. But
Good luck to you and to everybody with a job.
Yeah, exactly. But as regarding the local restaurants, what I saw was, or what I've seen with our restaurants is they all jumped in really quickly to do carry out. It was great for them to have that option still available to them. Some of the restaurants were more easily set up to make that conversion than others, but everybody jumped on really quick to do carry out. The hard part was getting the customers, the consumers, to get on board with it. They found like, okay, we're willing to do carry out, but people didn't know what restaurants were doing it, who wasn't. They're going to some restaurants, it's all about the atmosphere, or a lot of it's about the atmosphere. They don't necessarily want carry out. People, their own household incomes were cut, so it was better for them to just cook at home. But all of them jumped on board really quickly, and I'm seeing now that the restaurants that we have, they're all making huge efforts to do the social distancing, have sanitizer at their front doors, require masks, and try to open as much as feasibly possible. It's a slow process though. Restaurants aren't known to have a high threshold, as far as income. So, when they're hit, when all of a sudden they have no customers, they get hit pretty hard. But for the most part, I see them all struggling, and they're determined to stay and keep operating. The thing about restaurant people is they love what they do. So most of them really are going to do everything to make it work.
Yeah. Please pop your question into Q&A if you would like to ask one of the panelists a question. Emily, you had talked a little bit about rents and said that you would want to kind of hear from Connie and I. I know from my perspective, from a leasing perspective, from both office and retail, I feel like there's a healthy balance right now in the market. There's not a landslide of office that's available. It's just a real healthy supply, and the asking price and rent right now still seems strong. Like Connie said in her presentation too, we are a little ahead of the curve So, you know, it may change in 3 to 6 months, but right now as a broker, I feel like we're in a healthy market and there's not an oversupply. What's your thoughts, Connie? What are you seeing?
Yeah, I would agree with that. I think we were already at a very reasonable rate. I don't think we had a lot of inflated rents out there. We weren't that we were going to have to back off of. I think already we were in a very healthy real estate market as far as rents were reasonable. They were doable for the businesses, and things were running very smoothly, I think. And so we weren't coming off of inflated rates where we're going to have to try to get up to some unreasonable mark. I think you're right, Renee. I think we're pretty stable. And I think it's going to stay pretty stable.
Good.
Yeah.
I hope that we'll be coming back here in a year and I can talk about how wrong all of my charts were.
Yeah,
well,
I hope so too.
Yeah, we certainly value your input.
Better for everybody.
You know, yeah. You know, I've talked to several commercial lenders too, just checking in with them on their situations with their clients that are paying mortgage payments on commercial, especially large retail. And most of the lenders here in the Eugene Springfield area, very few of them have had to do any type of a workout plan with their commercial loans. It's just been a healthy market for them so far. Yes, some of them have called and said, you know, I might be late, or I might need a 1 month situation here. And most of the commercial loans, when that happens, they're just adding it to the back of the loan compared to the residential world. That's those forbearance situations on the residential are creating more of an issue. But in the commercial world, what they're doing is if you're asking for forbearance on your loan payment, they're just adding that to the back of the loan. But most of the lenders that I've talked to said people are paying on time, maybe a couple of days late and paying some late fees, but nobody is upside down and headed into bankruptcy at this point or anything like that. So I think that we are in a good position based on what the lenders are telling me at this point. Right.
Yeah, out of our 50 properties, I just had 2 that asked for a mortgage break. So, and one of them is a very small property. So, you know, they were hit harder because it was just a smaller property and with both with just retail. So, but just out of the 50, only 2 asked, and the banks, you know, did like just what you said. They gave them deferred and added on months to the end.
Yeah, great. So Emily, we've got a question from you from one of my clients that works at a local credit union. You discussed the trend indicating more people will be permanently working from home. Considering customer habits as they pertain to financial institutions, many people are using digital resources. Do you think that people will continue to use digital resources like online banking, or will they return to stores and bank branches, in your opinion?
I mean, I think that there has already been a trend towards people making greater use of online services. I'll say that personally, like my household has accounts with 3 different banks, and it's been years since we've set foot into a physical bank. So, and that was before the pandemic. So I anticipate that we're going to see use and perhaps even dependence on online services like banking continue in the future. So
yeah. Okay, great. And Connie, I'm really interested from your perspective with retail. Just what's your gut? You've been around a long time and you really experienced with retail. What's your gut tell you how retailers will be able to survive, or do you think Amazon is going to continue to compete with them, where more people are working from home, so they're just going to order something from Amazon and wait 2 days as opposed to maybe running out to a local shopping mall? What's your thoughts on that?
Yeah, I do worry about retail. I think that I think more and more they're going to get smaller and smaller. But I also am seeing the small retailers they are even ones that, you know, are kind of old school, been around for a while. They're making websites, and they're seeing that they need to have a face out there, and they need to have product that's available, or at least some representation online, so that people know to come to the store, or they can get information, or they can order things online. So I see a lot of the even well-established businesses and smaller, you know, mom and pops, that they're including websites, you know, and really beefing up their website and beefing up their availability to people who do want to shop that way. Mm-hmm. But it's still nice to be able to walk in and hold something in your hand, and there'll be a lot of people that'll still want to do that, or be able to try that dress on and not wait, you know, 2 days when you need it tomorrow. But I do see, I mean, I think, just my personal opinion, I think the large retailers, and those are the ones that are having a hard time, like Pier 1 and JCPenney and those, you know, they're having a hard time. You know, Ross, you know, just like you mentioned about the McDonald's letter, I was really impressed. Ross is one of our tenants, and I don't really want to pull out individual names, but I feel like I wanted to say that right off the bat, Ross sent out a letter, and they said, we're part of this community where we've had a good relationship with this, in this location. We're going to do everything we can to just participate, keep paying rent, you know, and they did. And, you know, in May, then they called and said, okay, we're going to get we're going to do a little bit of plan here, you know, when things, but right off the bat in March, they did send out a really nice letter and said, we're not going to do anything that we don't have to do. And we're not going to, you know, at large shopping centers like that, they have co-tenancy issues. And they said that we're waiving any co-tenancy issues for a year. If there are other businesses that go out, you know, we're not going to automatically fall into our co-tenancy reduced rent, that they put that on hold. So I thought that was very reasonable and very, very good. Of course, Ross is one that they'll bounce right back.
Yeah.
And, but it was very nice that they took the time, they made the effort to reach out. So
that's great. Well, I appreciate the audience's attendance. Emily, Connie, thank you so much for being here. You guys were a wealth of information.
Well, thanks, Renee, for organizing it.
Yes,
thanks so much, Renee.
Absolutely. I'll send the slides out from Emily to everyone, and I'll also send Connie's contact if you want some information locally. She's a great resource, and feel free to reach out to her, and we appreciate your time today. Have a great day.
Thank you.
Thanks, everybody.